Hello, 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 everyone. Good morning. Happy Friday. Happy PCE Friday. Good morning, Patrick. Good morning, George. Good morning, Jacob Martinez. Good morning, Donald. We'll get Bob. Bob will be on in a second. We'll get Bob's take on it. George is afraid of missing out. Good morning, Dave. Hey, good afternoon, Charles. Good morning, John. Good morning, Options 22. Good morning, Royal Palms. If we have time, we can check on that. Am I bullish or bearish on the day? I'm pretty much neutral unless we get some key levels broken. Good morning, Crystal. Let me just bring on Bob in 1 second. So far, pretty mixed map. Tesla up a bit. Semiconductors, after Intel's warnings, are taking it in the shorts today. So Visa still up a bit after their earnings report. Technology is leading the decline this morning, followed by real estate and basic materials. Fed still on track for, according to CME Watch Tool, for 25 basis points. Nothing changed with that. Still in greed mode. We're still slightly in positive gamma territory. The gamma flip is 40-40 roughly. So just keep that in mind as a possible key level. But up above here on any rallies, you do have dealers selling into the rallies a little at this point. Chevron was a pretty decent miss. Amex was a beat and a gap up. Colgate Palmolive was a pretty decent gap down after earnings. With that, I'm going to bring on Bob. Bring on Bob to discuss the numbers. There we go. There we go. You're on, Bob.
I'm just looking at to my right here, looking at what George said about gritting his teeth, staying in cash, and I look at the chart and I think about like what's the kind of thing that could help somebody who, and this is not, I'm not knocking George here. I think this is pretty much a consensus view, which is why I'm looking at it. Somebody who kind of has this idea that you should buy the exact, let's just say low close rather than just exact low, right? And a 13% move had you bought the exact low close, and I'm looking at the ES futures, you would have missed 13%, which theoretically is a multi-year move once we get into a new bull market, right? The average bull market lasts around 6 to 8 years. And that initial 30% that is causing George and people who think like George, again, George, I'm not knocking you. I think that's a very common view. How much money does that 13% actually account for versus the, what would it be if we broke the October lows from here? If we broke the October lows from where we are right this second, it'd be about a 15% drop. And again, once we break those October lows, if Mike and I are right that we're going to break them, and again, this is based off of analysis, not off of our opinions, right? Then what would be the next miss of a move that you would have off of the break of those October lows, waiting for either Mike or I or both to say, by the way, the anticipation of the probability of new lows is gone. There's still going to be a miss of a certain amount of a move, right? There's always going to be a miss when you want the probabilities on your side, as opposed to if you're like, okay, I want to buy the low close on March 7th of 2022, and then I want to buy the low close of May 16th of 2022. Then I want to buy the low close of June 13th of 2022, and then I want to buy the low close of October 10th of 2022. And I think I'm hoping for lows, otherwise I'd be long. But that's my point, George. George just added to what I'm saying, so I think you misunderstood. I'm in cash because I'm hoping for lows. That's still a mental state of wanting to buy lows, right? You buy the ultimate lows as opposed to, I've said this for years. I think, Mike, you agree with this. The way you make money while subtracting risk is not by buying low and selling high, but by buying high and selling higher. That's the way you take risk out of being in equities. Anyway, that's not why you guys have me on, but I was just struck by that. Again, and George, I'm not knocking you. It's pretty much the opinion of everybody. That I got a text from a really good friend of mine. Are the lows in yet? I mean, in my opinion, no. But when the lows are in, am I going to know it? Not once they're made.
Not
I'll
the
know it
exact
later.
day. You're not going to know the exact day and go, you might, we could get a wrap, like one of those capitulation, massive reversal days, which gives you a sign that this could be a low event. However, you're not going to know until it happens after the fact because, hey, the way it works. You got the text.
I'm sorry. Go ahead, Mike.
What was your text? Are the lows in? Did you get that this morning?
No, I got it a few days ago. I got a text. So are the lows in yet? And I said, I don't think so, but I'm not going to be able to tell you the day they're in. I'm going to be able to tell you weeks, maybe even months later, that those are likely the lows for this cycle, way after the fact. Which, for me, I prefer to trade the stuff until I believe they're in and just not miss out on that stuff. So, George, I guess the point is, and Mike has said this in multiple live streams with me on him, and I'm positive he said it without me on him. There's tradable markets here. I know for a fact Mike looked at a breakout to the upside on, I think it was the NASDAQ a couple of weeks back. I bought the end of the third quarter, even though I didn't think the lows were in. So you trade around it, and that's how you're not grinding your teeth waiting in cash. Anyway, PCE, again, that's not why you had me on. Mike, if you want to expand on that after I'm going, please do, because I think a lot of people need it. And again, George, I'm not picking on you, man. It is very much a common way to look at things because, again, I got this text. Well, it's not important when I got it. It was a few days ago, but I can show it to you on my phone right here. So are the lows in yet? And I said,
well, at least you didn't get the text that says, see, PC numbers tell me prices are dropping. Fed should pause. I'm like,
so I don't see where that is in the numbers. I don't see where in the PCE numbers prices are dropping. You look at the month over month, the year over year core, 4.4%, as expected. That is lower than the 4.7 of last year over year reading.
Well, see, that's a drop, so prices are dropping.
Yeah, they're not dropping, guys. I'm sure it wasn't somebody in this room that texted you that.
No.
But month over month, headline is up 0.1%. That is not a drop. That is an up. It's a positive. The core is up 0.3%. Up, not down. So that is not, prices are not falling right now, everybody. Keep that in your heads. That does not mean the Fed won't pause. We don't know what the hell the Fed will do. But I still think it's 25 basis points at this meeting. That's pretty much baked in. I am now thinking more and more, especially after seeing this number, personal spending down 0.2, but the jobs market still really strong. And what has every Fed speaker except for Lael Brainerd said, and she's working on becoming the chief economic counsel to the White House. So she clearly has a party affiliation. She's the only one who is saying that they probably need to slow down and pause. Every other one says we're not seeing any effect in the jobs market yet. And spending is down. Talked about this yesterday. Consumers are running out of money. Savings, record lows. Consumer debt, record highs. Of course, personal spending is down month over month because people are running out of money, but they're still getting jobs and they're still getting wage increases. And that is likely to keep prices growing, which is what they did this month. So having said that, anything in here that changes the Fed 25 basis points? No. Remember yesterday I said it's the first time I agree with Coco? PCE doesn't matter is what Coco said. I agree with Coco. It didn't matter today. We are not seeing much of a move in stocks at all. Stocks didn't move off of this number. They moved little to not at all on the futures. So this number didn't matter, but I would take note of that personal spending component dropping. That's what the Fed wants to see, but going along with that, prices didn't fall. They rose. As a matter of fact, the core PCE month over month is higher than last month, as expected, and higher than last month. Prices rose faster this month on the core than they did last month. Put that in your text and text it.
I just don't. Again, it's the same thing we've talked about. With even I listen to these people on TV sometimes. They even mix it up with they think the inflation figure comes down, meaning prices are dropping instead of it's just a rate of increase is not as fast, but prices are still going up. People are mixing a lower inflation number with deflation consistently, even on financial media shows. They're like,
yeah.
So
Most of the mainstream financial media is made up of idiots who have agendas. There really is, especially CNBC, but Bloomberg gone that way too. I'll tell you, they've just become sort of political showpieces, and I'll show you the one thing. There's something called the Principal Room where they do these headlines on Bloomberg. The person that does them in the morning is named Lisa Mateo. And when they started finding, I'm not making a political statement here, I'm pointing something out. When they started finding the classified documents in President Biden's house, they reported it, and then they said, many analysts, however, say this is not as serious as the one found in President Trump's house. Also complimented him for turning them over 4 months late, but 2 months late, I'm sorry. But none of that matters. That's not a political statement. Why is a little segment of Bloomberg Financial News, which is supposed to be reporting the headlines, saying this is not as serious as the former president's situation? That's an opinion. This is literally, I understand that there's opinions on a lot of news shows, but this is literally like a 45-second headline segment prior to a commercial. And they have to throw in the disclaimer that many political analysts say this is not as serious as the Trump classified documents. Just a point that financial media is doing you guys no favors at all, none, which is why you need to watch these live streams as much as you can.
All right.
Any
Bob,
questions for me?
Real quick, Bob, what do you make of increase in car repos for lending markets?
I would talk to Sterling about this a little bit, but there was a 5.7% increase in car payments that were 60 days late this month over last month. That's a December figure. It's likely to be higher in January. The reason I say that is because people stretch their budgets over the holidays. So it's likely to be higher in January. That's more than twice the record in 2021. The record month over month increase was about 2.3% in 2021. I believe it was March or April of 2021, right? Basically, the 1 year anniversary of the sort of pandemic panic that took place. So the record was 2021. This particular month over month gain was more than twice that. I will point this particular part out. During the Great Recession, 2008, 2009, cars were repoed at a lower rate than houses were. People made their car payments before they made their mortgage payments. And I suspect that's not the worst idea because you could live in your car, but you can't drive your house, right? So I suspect from that perspective, I understand why people were doing it. But if people are 60 days late at a record pace, it's likely they're late on their mortgages too. If that same behavior continued, that people would let their, now some of it might have had to do with people having second and third and fourth homes that they were trying to flip. That might be why that number was way worse. I don't know, but I suspect it's more behavioral economics than it is anything else. But
one other quick question, Bob. Vertical Dimension, aka Amit, asks, is there a known Fed PCE target?
Yeah, it's 2%. 2% year over year. As a matter of fact, when the Fed says 2%, everyone rushes to the CPI. The Fed, actually Powell has specifically said it's PCE that they're looking for that. So it'd be headline year over year PCE, which is at 5% right now. But you can keep looking at CPI. I mean, financial news media, again, just ignores that the chair of the Fed, which basically dictates what the Fed does. I mean, they vote, but they go with what the chair says. That's just been historically true. Has said that they look at PCE. But still the financial news media seems to focus on CPI. So it's 2%.
All right. There we go. Well, thank you for jumping on.
Yep, happy to. I will talk to you guys next week. Hey, what did Sterling say there?
What was that?
To Bob's point, I struggle with that bottom top. Okay, not that. And actually, real quick, Mike, I'm sorry, but I'm not encouraging George to short-term trade. I'm not. I'm just saying that if it bothers you to wait for the probabilities to be more on your side, it's something you could do to sort of ease that anxiety. And George, again, I hope you don't think I'm picking on you. I'm not. It's just a very common stance as shown by the texts in my phone. Lastly, Sterling says delinquencies in auto are increasing, but used car prices are stabilizing and trying to put in a bottom because new car inventories are rapidly diminishing. So I just want to add that to the point about cars. I'm going to go. You got a lot of stuff to do.
All right. Talk to you later.
See you guys.
Hello. I think I fixed my hot microphone. Thank you. I forgot who pointed that out. Thank you for pointing that out. Also, thank you, Ted. Also, thank you everybody else who joined after Bob came in. I know we had some other people in here like Happy Jack joining us this morning. So, very narrow range going into the open. I'm paying attention to this 40.56 level in the S&P. We break down below that. We are into a little clear path move, but this could be one of those not strong trend days where we get a more of a balanced day. Remember, we've had a pretty substantial run up. We've got daily cycles starting to roll. Daily cycles starting to roll over. And weekly cycles getting to that toppy area. Interesting enough, we got Fed Wednesday next week with the weekly cycles getting into that top area. So if we do my key level, again, I think this is a day you don't do stupid. I'll be paying attention to market internals right off the bat. And let's see if something develops. My key level is still this 40.76. We're still well off of that from there. So before that, that's my key level. But before that, if we can get above 40.66 and sustain that level or retest it and rotate back up, then I'll tackle yesterday's highs, then 40.82. And if this does decide to put in another super strong or a decent rally, 40.97 to 4100 will be key. If we go the other way and break below the already established lows, and by the way, this is where I will watch a key high from Monday the 23rd, that 40.56 area, which I already mentioned. The major support is 40.33, even down to 40.20. So there's a huge support zone in there. I'm expecting more of a choppier day, but it will depend on market internals. The NASDAQ, again, we're pausing right at that 200. We need to get above about 12.076, and then I'll focus on the 12.113 area from yesterday's highs, and then the 12.140 to 12.151 is key. On a pullback, the area I'm watching is about the Tuesday highs from here, 12.10, so 1,200. We start breaking below that, 11.970, and then about 11.940 are my key pullback levels. Major support coming back at 11.870. So there we go with that. Dow is very, very flat. Unless we get some kind of move on it, I'm just not watching this. We did close above the 62.5. So my minor target's 34,125. More substantial 34,307. Pullback level is 33,370. Russell, come on. Come on. Russell, my key first target will be about 1910. 1910 area. And then I got to flip these around. Don't waste everybody's time with that. I forgot to flip them. The potential major double top still on the table. Also, daily cycles rolling over, starting to roll over in the Russell. Support levels 1900 and then majors 1890. Real quick, the DAX, not much going on here. Just keeping an eye on this double top, but short term today's is 15 about 120 as key support. Notes, things are moving a little slow today. Notes, interesting enough, we look like we're potentially breaking below Tuesday's lows, so I'm watching for a pullback to this little support base in the 50 right about 113.32, 114. Dollar index a little stronger. Come on. Wow. A little stronger. Trying to bust into the rotation zone. But unless we really get a move above 102, it's nothing substantial. Crude still holding up with the double triggered double bottom. But it really needs to break above this 82.50 level. And remember, the first short-term target, not a stop-raise target, but the first short-term. We've stalled out at the first harmonic 3 times right now. So the second harmonic, 83.96, is the next short-term target. Spiders and the Qs. Trying to get into this real quick. 403.45 area. The first target is, first major support is yesterday's open that I'd watch for, coming in about 403.13. You break below that, it's 402.50, and then major supports coming in at 470. If we start to get the rally on, besides using intra-bar targets, the key area is 404.57 again to yesterday's close at 404.74, and then a major target is 406.03. The Qs, 292.10, so support 291.22. Yesterday's open, I'm watching for the support levels. And then my major support coming in around in front of yesterday's lows, about 288.95 to about 289.30 is my first support zone. Major support is coming back down about 286.80. On a play up, gonna be using the 292. That's too close, really. Where do we sit? Right here. There isn't really anything. I mean, the upside target would be back to 293.50. So I'd just use a round number in between there, 293, in case people are keying off of that. And that's about it. Besides using these harmonics will be also completely valid. So let me give those levels. 294.05 and then 295.48 are the intermediate levels for that. What else do we have? We can look at, I'm going to run out of time, so I'll have to look at some more stuff after the close. By the way, there'll be a shorter session after the close today. Nothing really yet with gold. Still watching for the rollover top, trailing stop levels. We can look at some of this other stuff. Keep an eye on the 10-year Japanese stuff, especially going into next week, climbing back to close to 50 basis points. So not necessarily today, but I will be watching more substantially going into next week for the rollover play in the yen. Euro, little weakening today, but still trading against some key support from the prior breakout area. There's just not much to do in that today. Little pullback in Bitcoin with the pullback in the NASDAQ. Tesla, after its major run yesterday. Still trying to put in a little more upside. 168.24 is the next key level. Minor level is about 163.50. Before that, again, can't get bearish until at least we take out yesterday's low. Also keep in mind, incredibly overbought. This is a major run with cycles at the top on the daily and the weekly. So if we start getting rollover plays, by the way, that level I listed is right at the weekly 200. So I still could see a little more upside, but this is not something that I want to chase and then not manage the position tightly. So there we go. I couldn't get. Do you keep an eye on call put flow? I used to more so, but stuff is so skewed now with short-term trading. And one of the reasons, the big houses don't have to, with the size and the liquidity now in the 1 day to expiration market, you don't have to report positions and stuff against again, essentially I'll get all your reserves if you're just trading in and out with order flow. So on these very short-term options, so the put-call ratio has become less useful at this point, just like the VIX has become less useful unless we get really substantial moves in it. So no, I do not closely follow it right now. All right, with that, let's just peek in at the tick, see where that opened. Then I have to jump. Let's see, 5-minute tick. Slight negative opening, but not huge. So I'm going to be watching to see if we could get anything sustained back above zero. If we take out the opening lows, it's minus 600. But I'll only get concerned with a more to the downside if it starts spiking down below close to 1,000. Other than that, it's a slightly bearish, but bearish to neutral tick opening. And see, the market's already trying to test some key levels, but again, unless this can really get a move on, still trading in this really tight range. So there's nothing for me to do in this tight range. With that, I will be back after the close. I will talk to them. We'll look at any other stocks after the close. I'll talk to anybody then. Bye for now.